Let's talk macros with Tony Greer, the founder of TG Macro, who's joining us right here on the channel to talk, to share his perspective about the same. Tony, hi and welcome on board. What are the trends we saw last time? We saw the yield curve at this inflection point. Do you think it's a similar pattern this time, or are there any differences that you can spot right now?
Well, the last time we saw the yield curve invert, it was around 2000 and then again around 2007. Back then, you could say it was a similar situation where the economy was rolling along strong and we kind of ran into the dot-com bubble the first time and we ran into the mortgage crisis the second time. So we're in a sort of similar situation with the economy rolling along strong and you don't want to fade the yield curve, and I'm speaking specifically about the 3-month versus 10-year yield curve in U.S. Treasuries. You don't want to fade that because it's been a great predictor of recessions when the yield curve goes inverted. And what's interesting is that the recessions have been, the last two recessions, the 2000 recession was only 8 months long. The 2007 recession was a year and a half, the Great Recession. And, it's just sort of hard to imagine that we're heading toward that type of a scenario now. Technically speaking, we would be already in a recession, and we are, the yield curve is saying that we're about to be in one now. The thing is, though, it doesn't feel like one. It doesn't feel like the data has been backing off in the U.S. like it has globally. Maybe we're a little bit of an outlier for now. But I would imagine that if we get pulled down any further, if China continues to soften and Europe continues to soften, the U.S. will obviously soften, and that's probably what the yield curve is telling us. I'm kind of trying to let that dictate the way rather than try to be an economist myself, though.
Okay, so could it mean that we are headed for a major downside, and would you correlate this to concerns around growth or even valuations for that matter?
Well, I think the Federal Reserve is trying to tell everyone that the downside is going to be limited. Their historic posture flip from hawkish to dovish was like nothing I've ever seen in my nearly 30 years of following the markets very closely. So I really believe the downside is probably limited, literally because the Federal Reserve will come in and buy stocks and bonds. It looks like we literally saw evidence of the Powell put. In the first quarter of this year as he pivoted to hawkish, and then they came out and made pretty positive comments about the bond market. When the Fed's Clarita is talking about potentially pinning rates here in the U.S., I mean, that sounds to me like it's a put in the bond market as well. So, it's going to be interesting to see how this plays out, but I don't think that we have major downside. I do expect there to be some sort of a pullback from this hysterical, beginning of the year rally because it seems like it's a bit overdone. But it looks like the market is going to be well supported by the Federal Reserve. And as long as that similar policy in Europe and Japan, then the downside is probably limited. I would say maybe 2,600 or something in the S&P.
And going forward, what would be your expectations on the bond market? Where do you think it's headed?
The bond market's the bond market's interesting right now. It's, everybody to one side of the boat. Everybody is becoming a bond bull now. The speculator length is growing a little bit because we're predicting a recession and we're trying to find a new low in the U.S. 10-year yields. I sort of think that we're going to find a steep low and then we're going to be in a range. Like I could see the range of the U.S. 10-year being 230 bid at 260, something in there. And, and I could see that maybe, the continuation of Trump policies will continue to be, everything he does is inflationary. He's a protectionist, he supports the military, he's a total fiscal spender. And since everything that he does is inflationary, certainly if we wind up with another 4 years of Trump, I don't see how U.S. yields can really implode too far. So I'm looking for yields to find a very steep bottom now as the spec piles in. And then I'm looking for the market to level off as the global economy levels off. I don't have a disaster scenario predicted for the global economy. So that's why I think that bonds can be a sort of sail on rallies.
No, there was an interesting call last week from a hedge fund suggesting going short and trading gold. Do you see more safe haven buying going forward?
Well, gold's been very interesting. Gold is, I don't look at it as much as a safe haven trade right now. I look at it as a purely market function trade. With the bond markets rallying so ferociously around the world right now, we are expanding the pool of negative yielding securities, right? We've got negative securities out 10 years in Japan, in Germany, and in Sweden. So, as that pile of negative yielding debt grows, you would expect to see gold rally. And you would expect all the precious metals and base metals actually to perform quite well in the periods where we have a large pool of negative rates. So I suspect that is probably going to continue for a little while. The problem is that gold has got major resistance up at 1350. So while I am bullish gold, I don't think that it's an outrageous idea to short it up at 1350 either. It's just been a good level that seems like there's a lot of selling up there. A breakthrough would be great and great for the gold market. But I would imagine that would have to come with a bigger leg up in the bond market here, which would cause lower rates around the world.
Can you, Tony, also help us understand some of the trends with respect to the US markets that you think are interesting, you think should be monitored at times like these, that Indian investors could possibly especially look at? You closely track the social media stocks as well. What's your latest view on those, for example?
I think social media stocks are going to remain, under the microscope, and I think that it's eventually going to lead to a big change in user behavior. There's already evidence that, the young people here in America have been leaving the Facebook platform in droves. The stock has hung in fairly well, but, we continue to learn about how, poorly they've handled people's data. And after, in the wake of finding out about it, we learn how poorly they are at handling a crisis. And I sort of look to them as the marquee stock in the social media sector. So I'm actually quite bearish Facebook. I've been playing it aggressively from the short side. And I think that the frying pan for Mark Zuckerberg is only going to get hotter as more details come out about how they share information. And I think it's going to push people away from those platforms a little bit. Similar, Twitter has got, I'm a huge user of Twitter. I'm on FinTwit every day and I follow the markets there really closely. But it still feels to me like Twitter is being operated by one of its competitors. It's a sort of painful service to use. It's got tremendous political bias that they are not ashamed to. They don't even try to hide. And I think that people get wise for that, and that there aren't people flocking to another platform simply because there really isn't another platform yet. But I feel like Twitter is easily replaceable also. So I'm sort of a secular social media bear from these levels, because I think that we've really seen peak Silicon Valley in 2018. So I'm pretty bearish the sector going forward. It may hang in there if the U.S. markets are strong, but I think relatively, I'm still going to play social media stocks, especially Facebook, from the short side.
Well, that sounds about right. And, just in case want to take a chance and ask you if you've looked at the Indian equities as well, or any particular sectors, themes, election related, banking related, or even a name like Reliance Industries. Your take on anything that has possibly caught your eye from the Indian market?
Yeah, it's hard to say, because it hasn't been a focus of mine. So I would just, from 30,000 feet up, I think that, I just feel like the country has been growing at a good pace, and I feel like, given that you've been such strong consumers of energy, I'm a close follower. I follow the oil markets really closely, and I know India has been a major importer alongside China. Those things are bullish for the country for me, and so that's sort of how I look at India right now.
Tony, on that note, I would like to really thank you and appreciate you taking time out to chat with us about the macros and help us spot some trends over the medium to long term as well.